Hello friends, welcome to the Block Thrasher daily morning crypto update where we are shattering the complexities of crypto with news, commentary, analysis, and education. The daily morning update is a news show. Every morning I scour the web to find the most important cryptocurrency stories of the day, and I bring those to you so that you don't have to go out and do that for yourself, trying to save you time, trying to keep you as informed as possible and educated on what is happening in the cryptocurrency space. It is March 11th, 2021. Another great day for crypto. Seems like every day of late has been a great day for crypto. There's some really great news regarding mass adoption or indicators that show that we are moving in that direction. We've got this battle starting to rage between the Ethereum miners and the Ethereum core developers. We're going to talk about that. The Ethereum miners are talking about revolting. What does that mean? How does that happen? What does that look like? We're going to look at the word of the day. Yesterday, I used the word Anacoluthon to talk about something that I often fall guilty of in my speech and in my communication. I do this a lot, but I was pretty certain that almost no one knows what the word Anacoluthon is, so we're going to look at that today. That's our word of the day. It is a great word, and it describes something that we really do a lot, especially in informal communication. We're going to look at the market as always. We're going to talk about the miners, the Ethereum miners, and how they're talking about revolting. We're going to look at how the nervous newbies in the cryptocurrency space are dumping, but all signs and indication and data show that whales and those who hold wallets for longer continue to hold through this market. We're going to talk about undercollateralized loans. This is something really great that's happening in the cryptocurrency space, and a project that's providing that is very new. We're going to talk about how government is impacting crypto and current movement in government. What is the government doing? A couple things in the news that are important. We're going to talk about other signs of adoption with institutional investors and such. We're going to talk about a coin highlight, which is Vulcan Forge. This is an incredible project. Anyway, let's get to it and let's move on to our word of the day. Anacoluthon. Anacoluthon. What is an Anacoluthon? It almost sounds like some kind of snake or something you'd find in the jungle someplace. Anyway, an Anacoluthon is from the Greek an, which means not, and kaluthos, which means following. It is an unexpected discontinuity in the expression of ideas within a sentence, leading to a form of words in which there is logical incoherence of thought. Anacolutha are often sentences interrupted midway, where there is a change in the syntactical structure of the sentence and of intended meaning following the interruption. So an example of this would be the Italian proverb, the good stuff, and then there's a hyphen, think about it. So there's this break in thought. A communicator or speaker begins a sentence with one thought, and this happens to me all the time. It's like, oh, wait a second, I can't finish this thought. There's some background information that I need to bring into the conversation, into the discussion, in order to make this, the rest of the thought, the conclusion of the thought, understandable for the person that I'm speaking to. However, sometimes that can be incredibly confusing for the person listening because, they just don't have that ability necessarily because they're not tracking with you as easily. They can't be inside your head and inside your mind to kind of come back to the thought that you were at. So if you do that, it's really important to make sure you kind of go back and reiterate the original thought after you've brought in the background information. Anyway, the proverb urges people, that Italian proverb that is an example, the good stuff, think about it, urges people to make the best choice. When Anacoluthon occurs unintentionally, it is considered to be an error in a sentence structure, right? And results in incoherent nonsense. However, it can be used as a rhetorical technique to challenge the reader to think more deeply, or in a quote stream of consciousness literature to represent the disjointed nature of associative thought. Anacolutha are very common in informal speech, where a speaker might start to say one thing, then break off and abruptly and incoherently continue, expressing a completely different line of thought. Well, there you have it, friends. Anacoluthon, word of the day. It's spelled, for those who are listening on the podcast, A-N-A Coluthon. It's a great word, but it's not a very commonly used word. In fact, some dictionaries don't even list it. It is in the Webster's Dictionary. You can find a great and lengthy discussion of it on Wikipedia, and it is in a number of dictionaries, but not all. because it is such a rare word. Anyway, I like it and I love it because I use it a lot. Let's move on to the cryptocurrency market and do our daily market update. Now, here I have the total market capitalization chart. Total market capitalization right now is $1.726 trillion, and that continues, as you can see by the chart, continues to rise as we move in a direction closer and closer to the $2 trillion mark. We are now approaching levels close to where we were just a couple of weeks ago when we were seeing the all-time high in this bull market, in this Bitcoin bull market. This is a good sign. We were at 1.763. It looks like, if I think that's the high point back then on the chart, to 1.72. So we're just really, really, really close, and that's a good sign. Money continues to move into the cryptocurrency space. The Bitcoin dominance currently sits at 61.2% according to CoinMarketCap, and Ethereum is at 12%. Gas prices are sort of stable for the last couple of days, with a slow transaction being 96 GUI, standard 108, and fast 132. All right, let's jump over and take a look at prices. Bitcoin is currently $56,000, 951 cents, up 3% in the last 24 hours, up 15% in the last 7 days. Fantastic. Let's go Bitcoin, right? Oh, by the way, yes, let's see if you can see it there. I am wearing my Tony Stark shirt today. I got this for not Valentine's. What am I thinking? Valentine's. Halloween last year. Decided to dress up as Tony Stark. And it was a lot of fun. Anyway, I don't know where. See, that was an Anacoluthon. I'm supposed to be talking about cryptocurrency prices, and here I am talking about my Tony Stark shirt. Anyway, great character. Love that character. Ethereum is $1,820, up 16% on the week. Binance Coin is up 28% this week at $305. It just broke through the $300 mark again overnight last night. It had a 7.69% increase in the last 24 hours, so it's doing well. Cardano is down a bit. Now it's been pushed down to number 4 in the CoinMarketCap. I know if you're looking on a screen, it says number 5, but I'm not counting Tether. It is currently $1.14, down 2.91%. If we look at the chart, though, Cardano is just trending sideways. And this is not uncommon with Cardano. It will sort of almost like a stable coin, while the rest of the market goes up and down a bit, just kind of hover, and then suddenly it'll take off again. And I'd imagine we see that happen here soon. Polkadot has dropped in the last 24 hours. It was looking good on the week, up 5.56%. It was actually up closer to 10%. Now it's dropped down, so it is at $37.72. XRP in the news again, but I've decided not to talk about it too much because it's the same story every single day. More XRP being sold by the founders, etc., this type of thing. So I'm just going to pass on those stories, but it is currently at 45 cents. Uniswap up for the week, 9.15%. $31.63. Uniswap looking good. Litecoin is up close to 10%, well, 9.6, so more like 9.5, at $202.48. Chainlink currently sitting at $30.04, up on the week, 3.39%. Let's see if we have any outliers here below the top 10. We do, with Bitcoin Cash is up 7.26% on the week. It's at $554. But the outlier really here is Theta, which I've been talking about this week and the last few days. Theta is a YouTube alternative, decentralized, allowing for users to get paid to watch videos and content creators to get paid by the users in the form of tips. It is up 58.53% on the week, up 20.66% to $6.85 in the last 24 hours. Uniswap, I don't know where Uniswap came from. Theta token looking really, really good, and we'll continue to watch that, see where that goes, of course. Now here we come to the number one top story of the day. Ethereum miners revolt over EIP 1559. EIP is the Ethereum Improvement Proposal. And so the core developers of Ethereum proposed in EIP 1559 a way to reduce the transaction fees of Ethereum. But what this does is it makes Ethereum mining, or it will potentially, no one really totally knows, but but the analysis is that it will make Ethereum mining less profitable for the miners. So I've been talking for quite a bit about the problem that Bitcoin often faces, and Ethereum especially is facing currently, is the inability to move forward with a built-in governance system, with an effective governance system. And so you get these contentious events occurring, and this is one of them, in which the core developers recognize that Ethereum is broken and we need to fix it. We need to move from proof of work mining to proof of stake. And that's what Ethereum 2.0 is all about. We've got the transaction fee issues. Not only that, the technology just wasn't capable of delivering the promise, which Ethereum was. The promise of Ethereum was to be the global decentralized computer for the world. However, as soon as some dApps started to gain in popularity and there was a lot of activity happening and a lot of transactions, and this has only gotten worse over time, it became congested and so incredibly slow, and the transactions per second just couldn't handle that kind of volume. And then it became this bidding war to process the transactions, and the miners would only accept the transactions that were at higher bids, right? So users had to increase the amount of their bid, and so it just gets more and more expensive. And we've seen some crazy transaction fees, especially with interactions with smart contracts, where transactions fees have been $100, and in one case even $36,000. Now that might have been an error. However, going back to the miners, in a show of force against the implementation of Ethereum Improvement Proposal 1559 on April 1st, Ethereum miners plan to direct their hashing power to the Ethermine mining pool, which operates or opposes, it's going to oppose the proposal. The coordinated action will last 51 hours, according to the plans, signifying their intent to harness more than 51% of the network's hash rate. During this time, the activists plan to analyze what will happen to the Ethereum network under the guise of, quote, educational purposes. So to sort of avoid the appearance of being contentious, they're saying this is educational purposes. But listen, this makes sense. Obviously, miners are in the business of mining to make as much profit as they possibly can. Now, when you have a proof of work system like Bitcoin and like Ethereum, you need the miners to provide security to the network. The more miners that you have, the more decentralized the platform is, the more stable and safe and secure it is. If you lose those miners, if Ethereum loses those miners before ETH 2.0 kicks in and before the proof of stake system is completely on board, Ethereum loses security and becomes more susceptible to a 51% attack. So it's not a good thing. So there's this tension going on here between, we know that Ethereum needs to fix these problems, because if they don't, the competitors, and there's so many of them. I mean, number one, Cardano, number two, Polkadot, number three, Avalanche and Phantom and Solana and Elrond and Algorand, and the list just goes on. And they've already they already have implemented proof of stake. They're already doing the things that Ethereum needs to and wants to do with the scalability and the fast transaction times, higher transactions per second, lower fees, and all this stuff. And then you've got the layer 2 solutions too on top of Ethereum, like Matic and others doing all this. Anyway, the point being, I digress. The point being is that there's this tension between the miners and between the core developers. The miners want to do what's best for them, and they have been operating under the original system, under the original proposers. So some people have spoken out against the miners and saying, well, they're just being greedy and this, that, and the other, and throwing. But all they're doing is operating under the original agreement that Ethereum was, which was proof of work, and they've been doing this for years. And so it's not, it's understandable that they want to continue to see it move in that direction. Anyhow, the users, the community, the core developers largely want to fix these problems, especially if they're big holders, big bag holders who can stake, because they're going to make more on the proof of stake system. And they want to see the problems fixed because they want to see value brought to the platform as more and more dApps actually work and work well, and then it will attract more developers, and those dApps that really become popular help build the network. And anyway, Ethereum miners generally oppose this because it will swap the current bid-based system for a set fee, base fee model, plus a small tip for miner compensation. The result is likely to create a cut in revenue for the miners. The last core devs meeting revealed that EIP 1559 would be packaged with the London hard fork this July, making a showdown between miners and devs inevitable at this point. Moving on. Enough about that. We'll see what happens. We'll see what happens. What happens when you have a bull market that begins to retrace a little bit? Well, according to the research and the data, nervous newbies are taking profits while long-term BTC investors hodl strong. Despite short-term Bitcoin trading spiking in January, wallets that have been inactive for at least 3 years are the largest segment of the BTC holders. So long-term Bitcoin holders appear to not be selling despite 2021's all-time highs, while nervous newbies have been taking profits along the way. This, according to Unchained Capital's HODL Waves chart, which visually illustrates the time since BTC wallets were last active on chain, 2021 has seen an increase in both long and short-term activity. And this makes sense. I mean, long-term hodlers who have a big bag, they can sit through a market and wait because they already have enjoyed immense gains. Whereas all the newbies that are coming in, they're throwing a few $100 here and there and whatnot, maybe 1,000, whatever it is, they fear a 10-20% drop because that'll just, be a big loss because of their entry point. Whereas the long-term holders, they're like, why would I do that? I'm still up 1,000%. I'm still up 500%, whatever it is, based upon when they came in. So this is sort of understandable and natural, but it does sort of illustrate that the older wallets, which would be people who've been in the space much longer, also understand the volatility of the cryptocurrency space and are less likely to panic sell and are probably more aware of what's happening within the entire market and are watching and seeing the massive adoption. And they remember all the things and issues that were occurring back then that aren't happening today and know the differences. And so they're holding strong. And it's smart. All right, we're going to move on to another story, which is this story about the birth of uncollateralized secure loans. And I'm going to introduce you to a project which is called LendFi, which is very interesting and something that I think we all need to be aware of and keep an eye on. By reducing the collateral requirement for crypto loans, LendFi, L-E-N-D-E-F-I, a second-generation DeFi platform, aims to achieve universal accessibility of financial services. The project has introduced an uncollateralized secure lending option where borrowers can choose crypto assets to invest in by securing a loan from the LendFi platform. So this is very interesting. We've talked about BlockFi before. We've talked about Celsius. There's a number of others, Unchained Capital, places where you can go and you can get a collateralized loan with crypto. And this is a really great thing because there are many millionaires out there who are very successful in the real estate market, let's say, in real estate business, who had some sort of failure in business or something go awry in the past. Their credit's destroyed. They literally are millionaires, but they cannot get a loan. They can't get a loan to do investments for their business, or they can't get a loan to purchase a home. So enter cryptocurrency and DeFi lending. They now can take some of their stash, put it onto one of these DeFi platforms, or not even DeFi. The other platforms that we were talking about, BlockFi, Celsius, Unchained, etc., these are not DeFi, these are CeFi. But they can get a collateralized loan, right? So what happens typically is they put in, let's say, $100,000 and they can get up to 60% of that in cash. So the benefit is, or maybe it's 30%, whatever it is, there's a certain ratio of collateralization that's required. But the benefit of that is they can hold on to their cryptocurrency investment and they can get a reasonable interest rate on a loan, reasonable fees. The lender who's providing that can make some money from that in these platforms. And they can get that loan and they can pay it off over time, but still hold on to their crypto and enjoy the benefits of the rise in price if it rises. Now, of course, if the asset that's been given to the company as collateral decreases, it gets liquidated, right? So there's that potential risk. But this is a great thing. Taking lending outside of the realm of the banks and of the credit system and providing opportunities for people who have the collateral but just can't get the loan for some reason through the banks, or maybe they don't want to. Maybe they can get a better interest rate. Maybe they can get it's faster. They can do it in seconds instead of giving out every last little bit of personal information to the company, to the bank, in order to get that loan. So now here we have Lendify, which is decentralized, a DeFi system, which uses smart contracts, not only providing the same kind of service for loans, but doing it in an under-collateralized way. This is huge. On Lendify, the liquidity to issue loans is provided by community members acting as lenders. They transfer the funds to a lending smart contract, which also acts as a recipient of collateral from the borrower. Once the collateral is deposited, the borrower will be able to invest in any of the many listed crypto assets on the Lendify platform with funds available on the loan contract. The capital available for the borrower to invest will include the equivalent value of their collateral and the liquidity provided by the lender. So this is really incredible. Now, there is one issue with this, and that is you lend the collateral in the form of a stable coin and you receive crypto. So if you're trying to get a loan to do some business, purchase a home or whatever it is, you're not getting USD loan like you are from the others, the centralized, the BlockFis and the Celsius, etc. There's also tax ramifications to that because then you might have to pay capital gains, whereas when you do take out that USD loan, that is not the case. And that actually is one of the huge advantages of using a platform like BlockFi. You keep your crypto, you don't pay capital gains, you get your USD dollar loans. You can actually write off the interest payments. So that's a beautiful, beautiful thing. Anyway, this is very interesting. So here is the Lendify.io, Lendefi.io website, which is something I just wanted to show quickly so that you could get a better understanding of what happens here. So they give you access to capital for crypto assets. So that's important. Not for USD, but for crypto. So crypto assets do not enjoy the access to capital markets for borrowing and lending compared to the other assets like real estate or shares in companies. Under-collateralized loans open up whole new possibilities for access to capital for crypto investments. Attractive interest rates. Lendify allows lenders to earn an attractive interest rate. So that's the other side of this whole token. Is that if you want to earn some interest, this is another opportunity. If you want to earn some passive income, loan your stablecoins, loan your to Lendify smart contract earn, right? Lendify allows lenders to earn an attractive interest rate by lending stablecoins through the Lendify protocol. The interest paid by banks on savings or term deposits is virtually non-existent, and in the future is likely to go negative, meaning banks will charge interest to hold money. Well, sure. And this is one of the reasons why we've seen such an explosion in the DeFi space and cryptocurrency in general, is because where do you put your money when you have your money? Well, you can't put it in the bank. You're not going to earn anything. There's no interest. But you can do that with these platforms. I mean, in many times it's a very good interest rate, 5, 6, up to 10%, sometimes even more, sometimes up to 20% with platforms like Celsius, if you do it in the Celsius token. Anyway, so no middleman. Lendify protocols cuts the middleman out of the lending process and removes all the red tape involved with lending and borrowing. This removes any counterparty risk between the borrower and the lender, who then can deal on a trustless protocol. completely decentralized. You can get uncollateralized loans. It's secure lending through the smart contract. And so let's look at the token. Lendify token. It's called LDFI. It has a total supply of 10 million tokens. Very low supply. And they're going to make it deflationary because a part of the fees generated on the protocol will be used to buy LDFI tokens and then burnt. They will be burning these tokens. And also a part of the fees generated on the protocol will be added to the staking reward pool. So if we look at some of the coin economics and details over at CoinGecko, we can see that the Lendify token, LDFI, is currently 28 cents. It is up 18.5% in the last 24 hours. It only has a market cap of $1,039,000 right now. Very, very small. Circulating supply is 3,600,000 out of the total 10 million. Its market high has been 29 cents, which is close to what it is right now, and it's had a low of 22 cents. So this thing really just hasn't gone anywhere as of yet. And that might, in part be also because you can't get it many places. Although you can, if you want to look at it, purchase Lendify on Uniswap. I was just looking at Uniswap and about to see Uniswap. Combine those two. What do you call that? Conjoining of two words together on the fly. Where it's not Anacoluthon, but there must be a word for it. I have to look that up. Anyway, moving on to the next segment. Government. Now, government, obviously, and the regulations that they are going to bring into this space has always been one of the most significant concerns that people have had. Well, here is a good story. Gensler confirmation as SEC chair would be good for crypto, says Hester Pierce. The SEC commissioner, Hester Pierce, is optimistic that the U.S. will eventually offer more clarity for cryptocurrency investors. Now, Hester Pierce of the United States Securities and Exchange Commission is well known as a regulator who has shown consistent support for digital assets, so much so that she has earned herself the moniker Crypto Mom, and she's been able to shake that. In a new interview with Thinking Crypto podcast, Pierce reflected on the United States regulatory approach to the asset class to date, arguing that, quote, this is what Hester said, "I think we have missed the boat a bit on crypto, and I think a big piece of that comes from the failure to provide clarity in our rules." She said that contrary to the persistent narrative that crypto is somehow indissociable from illegal activity and a desire to outwit the system, her own experience has been that industry participants want to comply with the rules, but have often struggled to do so without adequate guidance. She said, quote, "I am optimistic that we're going to finally get to the point where we do provide more clarity. I think we have a good chance. We're likely about to get a new chairman, Gary Gensler, who had his hearing in front of the Senate. That is one step in the process. Then he has to get voted on. And if he does get confirmed and come to the SEC, he brings with him really deep knowledge of the asset class." So here's the deal. We've already got the crypto mom, Hester Pierce, as a commissioner on the SEC. Now we're looking to see Gary Gensler potentially confirmed as the chairman of the SEC. Who is Gary Gensler? Gary Gensler was, among other things, a professor of blockchain technology at MIT. And this is his YouTube channel. You can go to YouTube, just punch in Gary Gensler, and you will see that he has this course on blockchain and money. So this is a phenomenal thing. If we see the chairman of the SEC, not just crypto literate, but literally a former professor of blockchain at MIT. Also, this is a great resource. If you want to go learn more about blockchain, go watch his courses. Other positive government movement, moving to the next story of the day. Wyoming. Wyoming is just shaping up to be, not to be, it is the most crypto-friendly regulatory state in the country. And this is just another sign. Wyoming Senate committee approves bill to recognize DAOs, decentralized autonomous organization, also known as DAOs, as companies. Wyoming continues to show the way to the world in embracing a digital decentralized economy. DAO bill moves to the Wyoming House of Representatives. Recently, the Wyoming State Senate approved historical legislation that seeks to recognize decentralized autonomous organizations as companies. As mentioned earlier, Wyoming is a clear outlier among U.S. states when it comes to regulations and having a conducive environment aimed toward helping blockchain and crypto businesses thrive. As reported by BTC Manager in April 2020, Wyoming authorities have amended the state's insurance code to allow insurance firms to invest in Bitcoin and other digital currencies. Similarly, in May last year, Rep. Jared Olson, Republican from Cheyenne, and Senate Minority Leader Chris Rothfuss, Democrat from Laramie, had announced the formation of Wyoming's new Permanent Select Committee on Blockchain and Financial Technology. In October of 2020, Avanti Bank and Trust successfully secured a bank charter from the Wyoming State Banking Board, making it the second entity to attain such a feat in the U.S. Unsurprisingly, the rapid rate of pace of digital innovation in Wyoming has alerted other states in the U.S. And we have also seen a number of cryptocurrency-based businesses set up LLCs and headquarters in Wyoming, and we're going to continue to see that happen, of course. Just more good news in regards to government movement and regulatory issues. Wyoming. Go Wyoming! Yes! Moving on to stories that illustrate mass adoption. One of the most notorious permabears, and we've mentioned him a couple of times because he just always seems to find his way into the news, is Peter Schiff. And this is what is ironic. This is hilarious. Peter Schiff's son goes all in on Bitcoin. He's hodling to infinity or bust. Unlike his father, Peter Schiff's son, Spencer Schiff, seems to be a serious proponent of Bitcoin. He's apparently gone all in on the cryptocurrency and has no plans of selling soon. Peter Schiff tweeted today that his son, Spencer Schiff, went all in on Bitcoin during the last drop below 50,000. According to his father, full 100% of his portfolio is now invested in Bitcoin. Oh my goodness, this is just hilarious. The elder Schiff has been a longtime Bitcoin detractor. However, his child's interest in cryptocurrencies may expose him to some new ideas. Selling silver for Bitcoin. Many longtime followers of the cryptocurrency industry know Peter Schiff as a public Bitcoin bear, consistently in the news talking about it and other digital currencies in a generally negative light. Yeah, he's proclaimed over and over again that it has no inherent value. It's going to zero. It's a Ponzi scheme. It's a bubble like no bubble anyone has ever seen before. Over and over again, all the time. So even as recently in December 2020, Peter Schiff made the news trying to explain the decline in cryptocurrency prices. Yeah, just like everyone else who loves to come out when cryptocurrency takes a bit of a decline or exits a bull market, it's to declare the death of Bitcoin. He has done that repeatedly. However, he did admit that he had got it wrong, quote, got it wrong about Bitcoin once it had passed the price of $50,000 per coin. Anyway, this is hilarious. Some people have stated, we will know when Bitcoin has finally reached mass adoption when Peter Schiff finally announces that he has capitulated and has purchased Bitcoin. Goldman Sachs, another story to illustrate this mass adoption. Goldman Sachs predicts explosion, a quote, explosion in the use of digital currencies. John Waldron, the chief operating officer of Goldman Sachs, says that client demand for cryptocurrencies is rising in a recent interview with Reuters. He notes that the pandemic has significantly accelerated the pace of cryptocurrency adoption, and he now expects a quote, explosion in crypto. Quote, he says, the pandemic has been a significant accelerant. There is no question in our mind there will be more digital commerce and use of digital money. One of the biggest Wall Street banks is now attempting to strike a balance between meeting this demand and following regulations. We are regulated on what we can do. We continue to evaluate it and engage on it. Waldron also reveals that Goldman is currently having discussions with regulatory bodies and central banks around the globe about how the nascent asset class should be approached. Yeah, translation, what that means is, hey guys, regulatory agencies, we need a way. We want to get in on this, but we need a way to make sure that we can get a corner and an angle on this market. We need to, that's what that's about. I mean, if these guys could have their way, mark my words, what would happen is no one would be able to invest in cryptocurrencies unless they did it to an accredited investor. They'd have to be an accredited investor, which means you have to have a certain amount of income, certain amount of capital, money, etc., whatever. And even beyond that, if they could get their way, the regulatory agencies will require that the only way to invest in these types of things would be through institutions like Goldman Sachs, right? Goldman Sachs has started trading Bitcoin futures earlier this week after reopening its cryptocurrency trading desk. The banking institution is looking into an exchange-traded fund ETF tied to Bitcoin while also planning to offer cryptocurrency custody. However, trader Peter Brandt recently warned that Goldman's focus on crypto wasn't necessarily bullish for the flagship coin. And I went and took a look at what he had to say, and it's basically some of the same things as what I was just alluding to, was that, historically speaking, when Goldman Sachs enters into a market, it's because they have figured out a way to get a corner on the market to extract money from their clients. And I don't doubt that at all. However, that being said, it is a good sign for adoption, and it's a way that accredited investors and institutionals and people who need to operate in that way can do this. Moving on to the last segment of the day, to our coin highlight. This project is in the news. Newsbtc.com. Vulcan Forged is the name of the project that we're going to highlight here. It is pushing blockchain gaming to the top as Vulcanverse creates a fantasy world like no other. Vulcan Forged, a blockchain gaming platform, is on the verge of redefining, according to this author, the $165 billion online gaming industry by creating a decentralized gaming ecosystem. So this is a lot like Decentraland in one way, and that is that they are creating and have created a game that is similar, like this virtual world where you can buy property and you can buy NFTs and assets and build things and do all that sort of fun thing. But it's also different because they have created an ecosystem that offers a suite of tools for game and dApp development, complete with an NFT marketplace and an arena for hosting game tournaments and other virtual events. Designed as an easy-to-play and easy-to-build ecosystem, Vulcan Forged is a community project that promotes the development of world-class blockchain games by supporting developers through its incubation and crowdfunding platforms and programs. For blockchain gaming enthusiasts, the Vulcan Forged is a one-stop shop where they can get access to popular games and a huge NFT marketplace to buy and sell digital in-game assets. The entire ecosystem is fueled by its own PYR settlement, and that's their token, staking and utility token. The ERC20 compliant PYR is a cross-platform currency that can be used across game titles that are part of the Vulcan Forge system. I tell you what, it just seems like these guys are doing everything right. So to sort of summarize it and wrap it all up, and I'll jump over to their website really quickly. What they are doing is they are creating a chain agnostic platform. So it will work and be compatible with Ethereum, but also with other chains. They're creating a tools for the developers to create games. So they're looking for what's it called? See it down here at the bottom. Ubisoft, is that what it is? Trying to think of this. I'm having a little bit of a blank, but there's a development platform that is very popular. Unity, that's it. Couldn't think of it for a second. Unity is just a gaming engine and platform where game developers can make games. Well, Vulcan Forge is looking for Unity developers because they are harnessing that, bringing the two together. So to go back to the summarization, providing all the tools for the developers to build their games, sell their games, market their games, and then they're providing the marketplace for the users to buy the games, build the NFTs within the games, and sell them in the market. And they just seem to be doing everything right here. Very interesting. Easy to play, easy to build. They have a number of platforms here. Let's look at the platforms and then we'll look at the products real quickly, and that'll summarize everything for us. So they have what they call Anvil, which is this instant DApp and NFT creation. And this is for developers and users alike. They have a marketplace, NFT auctions, trades, and listings. And then they have what's called Frenzy, which is the gaming and tournament platform. So they're pulling, like I just said, all of these things together, and this is really cool. Products: Vulcanverse, Berserk, Block Babies, Coddle Pets, Forge Arena, Geocats, Wrecked City, Very Art, Stamp. Coddle Pets. This looks like a CryptoKitties type of game. Forge Arena is a complex auto battler using characters from any Vulcan Forge DApp in group battles. Wage war with your Vulcan Knights against Coddle Pets or Block Babies against Geocats. All right, so in terms of the token, the PYR token, this is actually still in the stages of an ICO. And so if you want to look into that, this is not available on any exchanges as of yet. You can't buy the token or get it any other place as of yet. So they're calling it an ILO, an initial launch offering. And this is going through, it looks like March 19th. Different offerings are going up. Wave 2, public wave 2, token price 40 cents. Maximum investment of $50,000. Just kind of quickly looking at some of the, so these private round 1 and 2 ended in February. Public, okay, so they had a private offering. Now they're having a public wave offering, which goes to March 19th. And with Decentraland, their mana token has done very well. I would expect that this would be something similar. So if this piques your interest, you can go and do some more research, DYOR, on this before you jump in. But from what I've read so far, it sounds like these guys are taking all of the right steps as they launch this platform and project. So we will see. We will watch this and we will see. A couple months from now, 6 months from now, we'll have to come back. What's happening with Vulcan Forge? All right, friends, thank you so much for your time. It's just been another great day. It's been a great episode. I enjoyed this a lot. Please be sure to visit blockthrasher.com and sign up for a free membership. If you'd like to offer some support, you can get a paid membership there. As always, would love to receive some sort of a tip from you, a crypto tip, and how you can do that is in the description. I've got a blockchain.crypto address where you can do that as well. Please check out the Facebook group. Go find me on Twitter, just with the Block Thrasher is the handle. Love to see you back tomorrow. Have a great day. Hope you have a phenomenal day. I mean, I just hope you have like one of the best days you've had in a long time. See you guys later. Talk to you soon. Remember, it is always, always a great day to earn and to stack more crypto.